Michele, great to have you back.
Yeah,
Kind of
what
a
a
wild CPI day that we're having here. And
I
you know, I
know.
I pulled up your important chart, okay, part of your modern family that I think spells the difference between growth and the consumer folding is your XRT. I know you talk about XRT a lot. 78 is a big level for you. We're going to open underneath it. So, what do you
Yeah.
think?
Well, you also have to step back a little bit, look at the weekly chart. It gives it a teeny bit more room down to around 77. But, let's not.
Okay,
And that's
I'll
not
look at it.
picky. 77, 78, yeah, is key. But more importantly than the technical analysis is that essentially, and I did a daily on this week because I found it fascinating that we have two sides of the equation on the consumer. There's still somewhat of a robust spending, and I
Yeah,
came into this year certainly talking about this last year was the switch from the we to me, which
yeah.
I basically stole from Muhammad Ali in 1975, talking to a bunch of students. They said, give us a poem, and he said me we, and that has stayed in my mind because it's documented as the shortest poem ever. um
Yeah.
but essentially that's what's
It
happening.
says everything, though.
It says everything. I know. I mean, Muhammad Ali, genius on so many levels. But essentially, what it meant for me was looking at the consumer because of the diet drugs, and also just because of coming out of COVID, so much money being spent on taking care of family
Vanity.
and traveling. Now we switch more to I'm going to take care of myself. And it's
Yeah.
interesting because if you look at the surveys, there's been more spending on beach vacation, but also health and beauty, whereas there's also this no buy movement happening amongst younger people where they're actually in a challenge. They call it the no buy challenge, and how much you can get away with not buying anything. That's not a good thing. I mean, we cannot exist without the consumer. And what I find so interesting about this whole retail space is that it's so not mentioned. I'm glad, Dale, I'm thrilled that you started with it because nobody, at least that I have seen, has been talking about it. The main topics of
Well, you're the reason I started paying attention to it, and it makes sense to me. Um, Definitely, Michele. I mean, you said it. Every time we've had a recession, we've been urged, go spend, carry on with your lives, which means, running up your cards and everything. And, uh, do you think a breakdown in retail is going to be a sign that the consumer, besides the no buy movement, that they're just no money anymore to spend from no buy to no money?
Well, I'd say it's, if you look at credit card debt, we've seen the stats come out that that's rising. If you look at savings, we know that there has been some decline there. But we do also know that the consumers have had a lot of money basically for years now. So it's a very mixed
Yeah,
signal, which is why my other mantra this year has been price will dictate narrative. So all these retail investors, for example, who have been buying cryptocurrencies and stocks,
yeah,
particularly growth stocks, because that's all they hear about when they go on the media to listen to any of the major stations is, oh, space race, oh, chip technology, oh, AI. And they've all flooded into that and they've made some money. But if that reverses, I think it'll be a domino effect with the already pressure of the consumer. But we also know, just last thing we'll say about the consumer, is that they, in the survey last week, what was their biggest concern, Dale? Inflation.
yeah, right.
So, the key here, and I was listening to Steve before, and I agree with him. The key is interest rates right now, we saw the TLTs come off because of the hot number. But if the consumer starts failing or the job market starts weakening, the Fed is going to turn that around. That's what Powell has been saying is, yeah, inflation's sticky, but if we start to see a real economic slowdown, particularly through labor, we may change our minds. So I think we have to see what happens. But right now, this was definitely a messy number, no doubt about it.
Well, there was some hope in bonds and the 10 years that rates were
Right.
going to relent. A lot of people are calling this a head and shoulders bottom. The neckline we're underneath it, it's a failure of a head and shoulders bottom to me. And the lows that we made, even though it's an island, the momentum reading at the low suggests to me that there's another low coming, that maybe we'll have some divergence. And
And
this 85 level is so important that maybe what's going to happen is, you know how presidents early in their term face crises? Not all of them are manufactured by the president. You know,
right,
that
right.
could happen every day now.
Yeah.
But we could be looking at like a sovereign bond crisis, this 85.5 level, if you look left, that's what we recently held. And if we take that out, you know, we're going to new lows and
And
by a
and think about
lot.
the exactly, and think about the implications of that. I mean, again, we know that the consumer is pinched by inflation. We know
Yeah,
that the consumer has been pinched in some areas, particularly home buying, with high interest rates. So, how much can we throw on them? And at
yeah.
what point do we get to see Trump all of a sudden, instead of his big focus on cutting, is like, gee, we better stimulate because we need the consumer to keep things going. And I'm not very popular right now. I mean, one thing that we know drives him is his awareness of his popularity. So everything can change. Who knows? I mean, we don't know. Of course, that's what makes the market so exciting. But there's a couple of things that we do know. And, I heard you talking about silver before. So let's talk about the silver gold ratio a little bit.
Okay, good.
Yeah,
All
because
right.
I've got my three classic, or what I call the trifecta of inflation, right? So
Right.
number one is the silver gold ratio. And right now, I mean, silver is selling off a little bit here this morning, but not nearly as much as the gold. So,
Yeah, I have the gold silver ratio up there right now. So,
okay.
short term we made, we were diverging. I was looking for 92, but
Mm-hmm.
don't you think this is a good entry um, for a decline in the gold silver ratio to revisit the bottom of the range? And then if
I,
we take it out, then you got 50. So
I,
people,
I wouldn't, yeah, I'm sorry to
yeah,
interrupt you.
no, it's all right.
I'm drinking my coffee and it's early in the
Uh,
morning. I'm a little caffeinated here,
so
but
people could trade in their gold and get 91 silver coins, and they'll be glad about that.
well, yeah. I mean, just because if silver does really indeed start to outperform, that doesn't mean that gold is going to go down. I mean, gold can sit where it is and silver can still go up.
Yeah.
Let's go back in time a little bit. In 79, when silver and gold ratio flipped, gold didn't exactly go down. Silver just went up more. So
Okay.
that's number one. Number two is the silver to gold ratio as a trifecta of inflation. If the silver does start to outperform gold, that is one of my inflationary indicators. The
All
second,
right.
of course, would be the dollar. And I know you are all over the dollar. I don't know where you stand right now, but it seems to me like it may have peaked out at around 109, 110. But it hasn't actually really fully broken down yet. I'm looking for a
No,
break
it hasn't.
107.50-ish. If we can stay below there, that's number two. And do you know where I'm going with number three? Because you and I've talked for so long.
The
Do you know what?
grains.
Sugar. Put up sugar.
Oh, that's right, sugar. Yeah. All
Sugar,
right.
sugar, sugar.
Yeah, and you know what I wanted to bring up to you, Michelle, is how sticky inflation has been. And it's been this way with all the grains being in bear markets or going through big basing patterns, and they
Mm-hmm.
seem to be coming out of them. I mean, corn's already led for a nice rally. Wheat looks
Exactly.
pretty good to me. Beans don't look bad. So if we had inflation with tame grains, what's going to happen with the bull market in grains or some bad weather because of La Nina this year? Like we're having a drought out here. And I've
Mm-hmm.
seen La Nina years have that potential to spread into the grain belt in the summer. those dry conditions.
Right. I mean, I don't, you're absolutely right. I think all of the food prices have bottomed. If you look at DBA, it's actually now pre-market. We don't know what's going to happen once the market opens, but DBA right now at 28, that's a breakout. Our
Yeah,
quants have been long DBA this whole time. But DBA has a component of sugar. So let's take a look at sugar here because do you have it up yet? No, not yet.
I'm gonna
Oh,
get it
here's
now.
DBA. So look at that. Oh, okay. I'm sorry. You just.
Okay, our
I'm sorry. I told you I'm
our
caffeinated. I'm like, ah.
try decaf next show. Anyway, all right. So anyway,
So there's
there's
that breakout.
GBA.
Right. You've got that
Uh,
big spike there in 24. I don't know exactly what that news was that gave it that big spike. I don't remember, but it
yeah,
doesn't
look at
matter.
that.
What you see here is a massive breakout if it holds over 28. And you got to wonder is,
Yeah,
forget about the CPI and the PPI. I mean, this is why people are so, and I'm rightfully so, but they're so focused on these numbers and they're lagging. They're not leading. We like to look at leading indicators, which is why I've been watching retail as a lead indicator, and I've been watching the bonds as a lead indicator, and I've been watching the dollar and the silver and the gold. And now let's look at our dear little sugar. Okay, so unlike the TLTs, which you were trying to point out was the
right.
head and shoulders bottom, not only does this have a potential head and shoulders bottom, but look at that beautiful double bottom going back
Yeah,
from
yeah,
August to
right.
now. It held at 1750 like a rock. And now, if
Yeah.
it can get through $20, and this morning it was trading above. Now I think it's trading a little bit on 20. It's at 19.90 right now. If we get a close over, not $20, excuse me, 20 cents, you know, that sugar to me, even more than corn and wheat and soybeans, is so key for two reasons. It's a
It's in
food
everything.
it's in everything, and it's used as a
Yeah,
biofuel as well.
yeah, right.
But still, sugar is the comfort food, right? When people are under stress, and regardless of all the bad press about sugar, people still turn to it when they're under stress or when things are financially difficult for them because
Oh, I confess I had an Edgemans chocolate donut last night before I went to bed. And I used to eat a lot of Oreo cookies and milk as a kid. So I know the comfort. I'd pass out after about 10 Oreos and a quarter.
oh, of course, the sugar rush, and then the sugar
Yeah,
drop. Right.
yeah,
But anyway, but just to stick to the topic, I mean, this is really to me scary. When I say scary, scary for people who are so unprepared because nobody on the media is talking about this potential super cycle of inflation. And I'm not
yeah.
saying it's going to happen, but I'm saying the signs are there. And even China doing well is another potential inflationary sign.
Okay. Yeah.
Deglobalization is another.
How about all the emerging markets coming? I mean, DAX has been out, even the developed markets are outperforming us. Emerging markets, if we have this dollar top, is where you want to go. And China, yeah, here's China. So China's dead and they can't make anything happen. But the Chinese stocks have been outperforming, which is an emerging market stock, right?
Mm,
BABA, okay, it's a poster boy. Or there's
yeah,
FXI.
right.
I think this is where the money is after if we get a correction in equities into the spring, that outside markets will outperform the U.S.
I think right now, that ratio got so wide. I mean, I love
Yeah,
we see those ratios get stretched to the max, just like you're
yeah,
showing us with silver gold. There are so many ratios like that. Emerging markets to the S&P was another one. What's so interesting to me is, BABA was one of my top picks in my Outlook 2025.
good one.
So I'm happy to see it doing well. What I'm sort of scratching my head about a little bit is Vietnam. I was 100% convinced, and I'm still pretty much convinced that Vietnam VNM has bottomed, but it hasn't gone anywhere. I just feel like that Asian market should be doing better. So I would keep my eyes there as well. I mean, 11 has been basically sort of the rock bottom. It's been trying to go up and not clearing those highs, so then it sells off. If it gets through like 1170, in terms of an emerging market, I think that could be
Okay.
really, really interesting. I think you got to keep your eyes on South Africa because of its mining potential. Um,
Yeah.
yeah, and Brazil would be another one, although I think there's a little bit of political issues there, so I would not necessarily go to that one first. But that's in the emerging markets. That's kind of where I've been looking besides China and Vietnam in the Asian area. And then, if commodities do continue to run, then you have to look at the commodity producing countries, and that's,
Yes.
yeah.
Canada that we're going to
Canada.
go to war with. Yeah. I'm looking at, I wanted to ask you because, I see a lot of movie themes in the
Hmm.
markets right now.
Hmm.
And let's talk Mag 7. These were the leaders. They're now the laggards. People are starting to wake up to it. But my point being, here's Apple was the first one they took out to shoot.
Hmm.
Then they took out Nvidia. It's trying to
Hmm.
come back, but it's down a buck. Took
It
out
hit right
Mike,
resistance. Yeah.
yeah, took out Microsoft and shot it.
Hmm.
Took out Google last week and shot it.
Right.
Meta's the only thing going. So my question is, in the movie The Magnificent Seven, three of them survived. Do you think that life could imitate art
Well,
here
Netflix,
in the
Netflix.
Mag 7? Huh?
Well, if we're talking movies, let's talk Netflix. Isn't that in the Mag 7 as well?
Yeah,
That's
yeah,
surviving.
that's right. So there's a couple
Right. There's Netflix
still.
surviving. There's Meta surviving. And
Meta's, yeah.
I
So
wouldn't
there
necessarily,
you go.
right. And Tesla has gotten quite the decline, but it's really into some major support.
Yeah.
So we'll see what happens here with
I,
Tesla.
I, I don't know. I doubt that. A lot of people are saying, yeah, the market's broadening out, and I could see it in the Russell and stuff. But these are the soldiers that got us here to these astronomical levels. I don't think there could be enough rotation to make up for a bear market in the Mag 7 not affecting the averages.
100% agree. In fact, what I really basically say in the report and when I talk about it on media is that what we don't need necessarily the Mag 7 and the growth stocks to lead, but we need them to stay in the game. And that's talk about my modern family. That's where SMH, sister semiconductors, I call that area, is
Yeah,
key because it has been holding a 50-week moving average for 3 years. It tested it last week. It came back through it, but it's sort of sitting right around it here. And so if we break down, let's say back under that 240, 237, which has been sort of close to recent lows,
yeah,
that's when you have to say, whoa. I mean, it's not rotation. It's market is in trouble because, like you say, the soldiers are starting to go on
re-
leave.
yeah.
And
They're
we need
retreating.
them to at least stay in the game. And
Yeah,
what
I
could
mean, the semis haven't made a new high since July of
right?
24.
They were the first ones to
The
top
top.
out. Yeah,
Yeah,
and that how unusual is that? So,
yeah,
if we're looking around the family, of course, you've mentioned IWM, that 217 to 220 level has been sort of holding. Well, that has to continue to hold. I mean, these are the areas that I've been watching. XRT, we just talked about, semiconductors, we just talked about. KRE looked like it was having some relative strength. That's regional banks, and it's still
yeah,
doing okay. IYT did better because of Uber, but now with Lyft coming in lower and Uber now in sympathy to Lyft as opposed to the other way around, we got to keep our eyes there. But let's face it, that's why I have an economic modern family. It's called economic modern family because it's such a great view into the economy through these sectors. And right now, they're not exactly dead, that's the
yeah,
glass half full, but they're
yeah,
not exactly leading or proving the broadening out, as you say. So that means the glass is also half empty. And this is a really good time to focus on commodities, as we talked about, focus on emerging markets, as you said, but let's not get too hasty until we see that dollar, what that's going to do. And I wouldn't
Yeah.
worry about the bonds so much if you're going into some of those other areas.
Okay. And this has been the lead group for a while, the financials, right?
Right,
So
right.
I always say to myself, okay, if a leader is starting to falter, the weak will get weaker. And there's cracks in the mow of XLF and B of A. And one of the reasons I'm bearish B of A is they have the biggest book of long duration paper. So if
Uh-huh.
the bonds, if rates are going to head up and maybe even sharply, I think they'll be vulnerable. But
Well, and also a lot of the bank earnings were because of huge amounts of investment money. And so if people start to run to cash, then that would also affect the banks for sure. So,
okay,
yeah, I mean, I'm just looking to see what's holding up here green, before we go in. I still an unpopular opinion is that we're still going to see some movement in electric cars. Um, Oil, of course, is still the X factor. It started to creep up yesterday, but it had to get through 74 dollars a barrel in WTI, and it didn't, so it's come off a little bit. But I'm looking at some of the oil companies because they've been so beat up. I mean, how could you not watch Occidental, knowing the position that Buffett has in there? And I'm looking to see if it takes out 50, and that's actually green right now. Plug, which has been so slaughtered, amazingly green right now. Silver, by the way, went to green. Vietnam is green. In the biotech space,
yeah,
sometimes
they're looking good.
it could, there's some that have been so beat up that I've been watching. Moderna would be one, but
Yeah,
also in the diet drug, Eli Lilly started to do pretty good. Novo got beat up because there was that story about 6 people, I think, started to experience sight problems. One actually went blind. You can't count on 6 people, but that's the kind of story that really,
uh-oh, yeah,
it's like what happened to Chipotle years ago.
yeah,
A lot of people got sick and that stock got killed. Um,
yeah,
but right, FXI, China's up. My God, all the sectors are down right now, all of them. But we just have to be very careful. But so I'm switching my focus to not so much equities. And I
commodities.
mean, coffee, geez, coffee has
Yeah,
been insane. And so we'll see. I got a little bit involved in quantum computing and that thing got killed. So I'm waiting to see if it gets totally oversold because I still believe there's some future there. I mean, I don't think that it's 20 years out at all. I agree more with Gates that it's more like 5 years out. And I did
okay,
post yesterday, by the way, on X that I got out of all my cryptocurrencies. I have been in cryptocurrencies, some position or another, for 3 years. And
yeah,
yesterday, in the morning, before the market even opened, I just hit the sell button on everything just to preserve cash. So, do I think that crypto can go way down? It could, but right now, while it's trying to sort it out, I just figured I'd stand aside because you can always jump back in. But yeah,
true.
I mean, it's tough right here right now, and people are being sold a bill of goods on these high flying areas based on future with no real substance in what's going on in the present. And that could be kind of dangerous. So,
Yeah,
you know,
I
uh,
think Nvidia's the poster child for it.
Absolutely. NVIDIA is the
So
poster
we'll
child. I mean,
see.
even Palantir. I mean, Palantir, yay. We were long it in the quant. We took our last profit at 117. And I think in some models we're still in a tail, others we're completely out of it now. You gotta have some sense here, people, and not listen to what the media is telling you about what's hot, because that makes it sound so easy. And like every analyst that comes on, like they've caught that move. And trust me, they haven't.
Yeah,
So, you really have to think logically. And right now, what we're seeing is right, inflation's sticky, consumers hurt, as you mentioned before, Trump is putting pressure to lower the rates because he understands that that's what's happening. He wants the consumer to stay in the game, and yet at the same time, he's trying to be tough on tariffs. He's trying to be all things to all people, and we know that that cannot sustain.
Yeah. Well, he'll really be hammering Powell to lower rates when he sees what the bond market does today. I think that people during difficult markets, and let's face it, we're in a new regime, right? I mean, the times they are changing. So anyway, I believe that these three people right here, and you could just tell from listening to Mish talk about everything in the universe in less than 30 minutes, that you could learn and have a guide and be mentored. I get her emails that are the free ones that are very informative. It tells me what Mish is looking at, and I know how to trade, but I do like to uh, see or know what people are doing or thinking that I respect. It's kind of my research and mastermind. I do these interviews not just for you guys. I do it as, we, me. Now it's me, we. Okay. So, Michele, always great, getting together and batting the ball around with you. I hope this is a very successful year for you, your team, and all who read your research and all who hear your stuff.
Thank you so much, Dale. We wish the same to you. We love you guys, and yes, you're one of the good guys. You're doing so much to educate people from a much more sane place than just hype and headlines and movie titles, if you will.
Yeah.
So
Yeah.
congratulations to you too, and I'm so happy to see you're still here as
Yeah.
well, doing well. So thank
All
you so
right.
much for having me on.
So follow Michele at Market Minute on X and go to marketgauge.com and sign up for, at the minimum, get on their list. And that's a
Definitely.
wrap. That's a wrap. Don't just count your pips, count your blessings. It was great to have Michele with us, don't you think, everybody? And that's a wrap. You could join the team in 14 minutes. And don't just count your pips, count your blessings. It was a great show. Michele gave us some great ideas today. Thank you, my trading warrior sister.
Thank you so much, brother.
All right. All right.
Bruh.
That's see ya. See ya. And everyone have a great day trading. Be careful. There's no law in just watching if things are too volatile. There's no law you have to trade. Sometimes you're paid to wait till the dust settles. And that's a wrap. Good hunting, everyone. And thanks again, Michele.
Thank you.
See you in the spring.
Yeah.
All
Bye.
right. Goodbye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.